If anybody has any like admin questions or anything about the tools, in general, before we start here, it's like, just again, I'd be happy to answer that. If you guys want to just say what's up in the chat, then we're gonna be always there to say what's good too. Someone says, curious why most people use 1 day stat map more than 4 hour. I'm looking at the 4 hour more. So all of our tools are model agnostic, meaning that every single tool has the ability to meet different type of models and strategies for timeframes. So it depends on the user's, personality and the analyst personality of how long one person wants to be in a position, and also the framework in which that they take on. So from a personality thing, I personally like to use macros. I like 4 hour and I like daily alerts. I like weekly alerts. So I personally don't like to necessarily use the daily and weekly on one intraday chart, just because again, it's like I like the levels as an alert. On the daily level, that's again for a specific layout that I have. But on an intraday basis, the macros on the stat map are really, really, really powerful. And as well as the 4 hour, you can kind of see that the 4 hour today during, the Asian Open, a lot of the group was looking at that and pretty much nailed the low. And that's pretty incredible. That distribution on the stat map, just instant repricing, candle close, and then had new change of state of delivery, and price just started to, return back to the new week opening gap. Shout out to Itsalgo. He's like, gap fill anyone? And I was like, you know what? 100 points, change of state of delivery. And there's a quick scalp. So curious on anyone who caught that. Where was the entry after the 4 hour distribution? So like there's no specific, like no one's going to necessarily tell you when to take an entry. It's really, really important you understand that. Like there's a bunch of different entry, ways that you can look to get into a trade. But again, that's going to be to your own back testing and your own risk profile. So the confluences that were used, that's where I was looking at the weekly AMRP for the DCT models that we were testing. We had a 4 hour manipulation and distribution level hit on an instant repricing. And we also had a new week opening gap that was very large, and over 100 points was enough of a range of opportunity for me to engage in a setup. Hopefully that answers your question, ICX. So we're going to talk more about the stat map. I definitely would tell individuals and analysts to like go to our external resources and just start to view more examples, because the tool is also very visual. So the more that you see like examples of how the tool is used by other analysts, you're going to start to notice similarities and or differences. And then your mind's going to be able to be like, hey, listen, I'm passionate about something, and that I see, and then your curiosity is going to allow you to dive deeper and to more or less create more trust for what you're looking at. And through data and back testing, there's a ton of people that are in indices chat that are constantly back testing our tools, that you can just engage in a conversation and you'll see that there's always somebody that's going to be there as well. Is the levels provided by stat maps and the reason behind it learnable from anywhere, or is it a secret? So most of the information, again, that you can understand of how an open, high, low, and close is just viewed is, again, how the manipulation and distribution is largely calculated. So again, most of that is, again, just on the public blog, that on the stat map, as well as, in the Notion manuals and a lot of Twitter examples as well. So nothing's like some like secret hidden sauce. Obviously it's coded to a high level of proficiency, but the manipulation and distribution is just an OHLC candle and or whatever time frame you have selected. So through data calculations, we pinpoint through data what you're seeing visually on your charts. So hopefully that answers your questions as well. And ICXBL said AMRT, and it was AMRP as in Pablo at the end, and that's for the average model range probability. And that's just based off of historical data that you're able to set for your own look back. We have a couple more minutes in here. We got a nice audience, about 100 and, so people that are in the live stream. If you guys again have any other questions for the next 4 minutes, I'm sure that be happy to answer it. Ash is over here ready to go through a lot of sauce. So again, if you guys don't have a notepad or a note taking device, word, notes, text, edit, anything that you can just write something, create your own Discord server as your journal. There's a bunch of things you guys can do. You don't need to necessarily, share it if you want, but, we've always said it on our live streams that anybody that shares their notes and contributes to our community, we always reward them with our 2 degrees XP, which you could learn about um, here, and I'll drop the link. It's a place where you can get your XP tools, and XP tools are free tools. And then as you level up as well, you're able to gift an actual Pro Plus tool to a non-subscriber. And it's just a way for us to expand our community as well as you to, have more value in your own leveling system to ensure that, again, you guys are more or less seeing that we want to grow with you. It's the more you guys know about our tools as well, it's like the more we can also engage. And we want to make sure that, most people understand what it is that we're presenting so that we can also go further and more advanced stuff. So you can't gift yourself a Pro Plus tool from XP. You can only gift a Pro Plus tool to a non-subscriber. So hopefully you understand like why that is as well. It's like, we can't just have people just level up and just get free tools that other people are paying for. So that's, really important. As you level up, it's really important that you also realize that you're going to learn more about the tools. So it's a communal benefit that you're going to be able to give someone as well as, being rewarded for your own ability to learn. Exactly what Forge Futures said. It's talking about like these levels are not a hard line in the sand. Like it's not like you're just seeing the level and just instantly gonna, take a trade just because you see the level getting hit. I know some examples just may look, very, very nice that, it more or less urges someone to do that, but that's just not necessarily what it's there for whatsoever. So it's just really important you do your own due diligence and have your own model. So for the last minute, I'm just gonna kind of just take a sip of water and, check up with Ash, make sure he's all good. We're gonna be starting very, very soon. Um, if anybody again is taking notes and they would like to share that with the community after the recording, they will be rewarded XP. So we appreciate everybody contributing. Good morning, good afternoon, good evening, wherever you are in the world, and get ready to learn.
Thanks, Josh. Yeah, I'll get started here in 1 minute. I'm gonna get the recording going, so I'll do a little opening as well. So we have 1 more minute. At 9 o'clock, I'll start the OBS and we'll get into the conversation. If during the meeting I miss any of your questions or comments, please know that I'm gonna go through my experience with the tools and explain how I use it. I'm going to go through almost a lecture styled type of meeting. And then at the end of the meeting, I'm going to circle back around to the questions. I just want to show how I'm using it and explain my experience with it so you guys understand what I'll be talking about. And then we'll come back to the questions.
Sounds great.
All right, so let me get over to OBS. Let me turn this on and then we will get into it. Alrighty. Hey, good morning, everyone. Welcome to the live stream. My name is Ash. You could call me Matt or Ash. Matt is my real name in real life, so feel free to call me Ash or Matt. Today I'm going to be speaking about my model. I'm going to go over my experience using the stat map. I'm going to show you how I conduct my model and then how StatMap fits into my model. For anybody that is new to my information, please feel free to ask any questions. I will get to the questions after the lecture. I want to start with saying thank you to 2 Degrees and their team. Their tools are absolutely phenomenal. My experience with them has been more than I could have imagined. So I am going to walk through some of the examples to explain how I use their tools along with my model. I just want to make sure I get a warm welcome and a thank you to the 2 Degrees family, because some of their work is quite astonishing. So thank you for having me. Today we are going to go over my model. After going over the model, we'll take some questions while looking at New York Open. So when dealing with day trading, the first thing that I'm always looking at is time. Time is always going to be my first element. Okay, so in regards to time, we always start the day on the economic calendar, right? Forex Factory. I'm going over to the economic calendar to understand the important times of the day. So let's get over there and let's talk about it. I'm a New York Open trader. I focus on trading indices, right? ES or NQ during New York Open. Purpose being is, one, I'm from the US, so it's the best time that works for me in my daily life. Two, this is where all your high impact news is. So in terms of volatility, you're going to see volatility for every single 9:30 open. The stock market opens at 9:30. Okay, there's an influx of buyers and sellers that come into the market. That is why you always see some volatility at the 9:30 open. On top of the 9:30 open, you have your high impact news drivers. I'm only focusing on the red folders. You can see that there is no orange or yellow folders on here, and that is the purpose. The red folders are the high impact folders, and you'll notice that the red folders always occur during New York AM. So this goes back to the timing part of the conversation. I'm always focusing on time, time being the most important element to the model. Therefore, I need to understand the important times of the day. So seeing that today is Monday, there are no red folders, right? That to me tells me that 9:30 is going to be my important time of the day. And I'm looking to participate after the important time. So since the only important time today is 9:30, I'll look to participate after 9:30. If this is tomorrow's example, tomorrow we have elections, and that is an all-day red folder. So I'm not looking to participate tomorrow. Once again, the statement holds true for any day of the week. I look to participate after the high impact. If there is no high impact, the only important time is 9:30. Okay, so tomorrow, since it's all day long, I'm not going to be participating tomorrow. Wednesday, again, no red folder. So 9:30 is going to be my important time. And then Thursday, we have FOMC. FOMC is also another day that I don't participate. There's only 3 days that I don't participate in. 4, excuse me. Bank holidays, I don't participate. FOMC, I don't participate. CPI, I don't participate. And non-farm payroll. Reason being is they're the most volatile events that we have. And I'm a risk manager. I'm not a euphoric gambler. I'm thinking in terms of risk, not reward. Okay, I'm sitting here saying, what is the worst time to get something wrong? If you were to get something wrong during non-farm payroll, that sounds so much worse than getting something wrong on a day that doesn't even have a red folder. I don't even want to think about the slippage that would happen during that point in time. And that's the purpose. I'm a risk manager. I'm not sitting here thinking euphorically. I'm not saying this is going to be the one. No, absolutely not. So understanding the times is the most important element to the entire model. Therefore, we're always starting on the economic calendar every single week to understand those important times. We move from time to draw on liquidity. You can either refer to draw on liquidity as your higher time frame order flow, right? I want to be on the same side as higher time frame order flow. So in terms of getting a bias, right, you can interchangeably use the words of draw on liquidity and bias, right? Whatever your opinion is of where price is reaching for, right? That's a bias, or that's, what price is drawing towards draw on liquidity. So now, understanding our important times, I'm looking to understand our draw on liquidity. The way that I use this is going to the daily chart. Notice I'm on the daily chart here, and I'm understanding internal liquidity versus external liquidity. Internal liquidity is fair value gaps, right? Fair value gaps, or swing highs and swing lows. So external liquidity is swing highs and swing lows. Okay, so I'm looking to understand where price is currently located at the time of New York Open to give me a bias. Okay, so price is either located above a swing high, below a swing low, or inside of a FVG. If price is located above a swing high or inside of a bearish FVG, I have a bearish bias. If price is located below a swing low or inside of a bullish FVG, I have a bullish bias. Okay. So for this example, today, we most recently swept a swing low, right? So external here. And price is only ever doing two things. So price is either grabbing liquidity below a swing low or above a swing high. That's one thing that price is doing. Or the second thing that price is doing is rebalancing an imbalance, right? So depending on what price did most recently gives me my bias. So for example, we just ran out this swing low here on the daily chart. So I would look for price to then rebalance an imbalance. Okay, so a bias or a draw on liquidity is an idea that gets you in and out of a position. You do not need to predict the next 12 daily candles in a row. You simply just need to get in and out of a position. Okay, so I don't care where this daily candle closes. The only thing I care about is getting in and out of a position. Right, so now we're talking about the first two things that create this model, which is time, draw on liquidity or bias. It's the same thing. Now we're looking to execute a breaker block plus an FVG at a higher time frame level that is aligned with these two things. Let's make this a little bigger. All right, so time, bias, entry function. Okay, so all we're looking to do is understand time being the most important element. Then we're looking for our draw on liquidity or bias. And then we're looking to execute our entry function aligned with number 1 and number 2. Okay. Now, to make it a higher probability situation, you want to be doing it after the opening time because time is the most important element. You want to be doing it aligned with the draw on liquidity. And lastly, you want to be doing it from a higher time frame level, right? So this is where the stat map comes in for me. So now during New York Open, right? Now during New York Open, I'm moving from the daily chart to the hourly chart. The hourly chart is where I used to get my higher time frame points of interest. Now I'm replacing that with the stat map. So this is the purpose of the tools, to make your abilities as a trader more efficient, right? I've essentially automated a piece of my model, which makes it more efficient for me because I don't have to do that anymore. I would have moved from the daily chart, right? So I understand time. Then I get a bias from the daily chart. And because of time frame alignment, I move from the daily chart to the hourly chart. And on the hourly chart, I would be looking for higher time frame points of interest to execute my entry function. I no longer have to go to the hourly chart to look for higher time frame points of interest because of the stat map. Okay, so now instead of going to the hourly chart, I'm moving to the 5-minute chart because this is where I look to execute. And this is where the stat map comes in. Just give me 2 seconds. I'm going to take another sip of coffee. Thank you very much for your patience. So now I'm stating how I use the tools. I'm not sitting here stating the correct way to use the tools. Quick little sidebar of mental intelligence or emotional intelligence. Just because I use the tool the way that my model needs the tool doesn't mean that's the only way to use the tool. So if you need some logistical understanding of how the tool works, that's where I would say, please talk to the 2 Degrees team so that they can give you that insight. The insight that I could provide is how it lives within my model. And this is where the mental shift needs to come in, is that everybody has their own model. Everybody uses what works for them. And that is the best way forward. Being an independent thinker is the best way forward. Okay? Don't look for external factors to give you the justifications to your actions. Look internally and take extreme ownership to your business. Okay? And what I mean by that is take the tool, execute your model, review the results, and say, did this work for me? Am I getting better results? Yes or no? That's how you would understand if it's working for you. Everything else is noise. Right? So if I'm using it in a manner that is different than yours, that doesn't mean it's right or wrong. There's only profit or loss in this business. Okay? So if you're profitable the way that you're using it, there's nothing wrong about that. Because that's the only thing that matters. You're either red or green at the end of the day. We can figure out more efficient ways to use it by asking questions. All I'm pointing at here is that you have to understand being an independent thinker is the best way forward. Now I'll finish up with that sidebar and get back to the model. As I had stated, time is the most important element. I'm always aligning myself with time. I don't execute before the opening. I don't execute before the important time. So I'm looking to execute my entry function after the important time, aligned with the draw on liquidity from a stat map level. And I understand that New York Open hasn't occurred yet, so we can also go back and do a couple examples from the prior week to show you what I'm referring to here. But now, where I stand here is just being patient because it's only 9:16, so the Open hasn't happened, and I know that I have to wait until after the Open. But when the Open occurs, that's when I'm looking for a breaker that has an FVG aligned with it, right, a unicorn, at one of these levels. Right, so this right here. At a manipulation level, getting a breaker that has an FVG aligned with it would be my model. I wait until after the opening time. I align it with the draw and liquidity. I look for a breaker plus an FVG aligned with those two things. And then I'm executing this here. Okay, so that is how I use the stat map. I'm going to dive deeper into an understanding of the stat map. And we can use prior examples of this since it's not 9:30 yet, so I'm not looking to participate yet anyways. So we'll go back to prior examples. And then I'm also going to provide a little more sauce regarding the model and implementing the stat map with it. So let's just look, we'll just go through last week's price action. That's the easiest way about it. Let's go out to Monday and we'll walk through each day. So let's see. Thursday, Wednesday, Tuesday, Monday. All right. So here is the next part of conversation. Now, once again, I'm not saying what is right or wrong. I'm simply providing my own experience with it. If you have a different experience, that is completely okay. Once again, other people's opinions are great. I appreciate them, but it is just noise because you are the only one pressing the button. So provide logic that you can clearly identify and define in real time so that when you're making decisions, it could be more of muscle memory. You don't want to fall too far into discretion because then it might hold you back from executing. And that's kind of the answer to that statement, is that if you know the logic that you're dealing with, it's more of muscle memory than sitting there having to make the decision in real time, which might cause some lag in execution. And now here comes the logic that I'm referring to. Once again, I'm not saying that I'm changing my model. I'm just providing logic to using these tools. If you haven't already, you can also get a recording of this information on YouTube. We did a meeting with Juno recently covering this information. So if you need something to reference, Juno has done a phenomenal job once again making an extremely aesthetic piece of content that is highly valuable. If you pair that PDF with what I'm about to say, it's going to be a very easy walkthrough of this tool. Give me 2 more seconds. I'm going to take one more sip of coffee. For whoever doesn't know, black coffee with a little bit of honey in it will change your life. I'm telling you, black coffee, a little bit of honey. Amazing. Alrighty. So, thank you for your patience. Now, here's the logic. No, again, no, I'm not changing my model. I'm going to continue using the model the way I do. This is just narrative. This is logic. This helps the decision making when understanding the model. So, first step to the logic is defining the range. The range is always, oh, I have the magnet button on. There you go. The range is always going to be your manipulation level to your manipulation level. This is what we will define as the range. Okay? Step one is defining the range. After defining the range, we're looking for a draw on liquidity. And look at this opening gap here, right? So I just need to move that out of the way to show the draw on liquidity real quick. If anybody knows about gaps, right? Gaps like to get filled. We have an opening gap here that could easily be a draw on liquidity. So step one is identifying the range. We've identified the range because it's going to be the manipulation level to the manipulation level. This is always going to be the range. Step two is finding the manipulation. So once price visits one of these levels, okay, either side of the range, we're looking at that as a deviation of the range. Right, so any range traders in the chat, this is going to be a very common way of viewing price. So whoever range trades is going to understand what I'm saying here. From manipulation level to manipulation level is always going to be our defined range. Right, so the stat map, once again, provides those levels. Now, once price visits one of these levels, we're identifying it as a deviation of the range, right? Manipulation of the range. Now, all we need to do is wait for price to enter back into the range to think that this was in fact manipulation. And once it does, that's when we target the other side of the range. Okay, so let's walk through it here. Notice the time, right? Again, time being the most important element to my model. Here's 9:30. Look at what happens at 9:30. We enter back into the range. So now step two has occurred. We have, in fact, manipulated the top side of the range. Now that we've entered back into the range, the next step would be to target the opposite side of the range. How are you going to target the opposite side of the range? Is going to be completely contingent upon you and how you execute price. My way of engaging with price is a breaker with an FEG aligned with it. Right? So there's a reversal breaker here, and then you get a continuation breaker here. Breaker is the lowest down closed candle before the leg up that took liquidity. Nice reaction to the reversal breaker here. And then we also put in a continuation breaker here. So understanding the logic of using the stat map and then understanding how I engage with price, this looks like a short to the other side of the range. Right? And since it's 9:30, I can now engage with price. So we're looking at a continuation breaker to move back into the range. And understanding draw on liquidity, because I said draw on liquidity was my second most important concept, I don't need to be greedy and target a complete fill of the range, right? A complete fill of the range would be here. I don't need to be greedy. I pointed to the draw on liquidity before I started this conversation because of the opening gap we have here, understanding gaps as a draw on liquidity. Gaps like to get filled. So I need to at least target here because that's my objective, because that's my draw on liquidity. Now that it's 9:30, I also have something to engage with price, meaning my entry function, a breaker block plus an FEG, which is currently on the screen. So you could execute this short position exactly how the position indicator tool is showing. I always enter from the beginning of the breaker block with a stop loss 1 or 2 points, a couple points above the breaker block, right? Anywhere in here, a couple points above this gray box. Okay, so I mean, virtually no drawdown here. And now we're just looking, we would be in a position here looking for draw on liquidity here. Right, so if you didn't close it up there thinking that we're close enough to the draw on liquidity, you have 1 or 2 options. Me as a trader, I don't move my stops. I know everybody has their own opinion on this, and once again, it is completely fine to have your own opinion on this. For me, it's either a win or a loss. And I've accepted that risk before the risk was ever even taken. So I'm sitting here saying, I'm either going to get stopped out of this position with my stop loss, or the objective to my position is going to be completed. There is no in between. Now, I'm not sitting here saying that's the right way of going about things. I'm saying that's my experience and that's how I deal with price. Everybody's allowed to do whatever they want, and I encourage you to look at your own results to understand what you work best with price. But nonetheless, that means that my TP wouldn't have been filled yet because we haven't gotten to where the TP was. So I'm just sitting there waiting. Got another entry opportunity here for another short. Right, and now we're looking to move to the draw on liquidity. And there you have it. So the draw on liquidity was correct. The timing was correct. The understanding of the logic using the tools was correct. And your risk to reward was correct. So I'm going to go back one more time to point out the logic. The logic being, here's always going to be your range here. We're going to identify the range each time. And then, depending on what price does to the range, is how we're going to use it. Meaning, does price go above or below the range? That'll tell us which side is being manipulated. Then, does price come back into the range? That shows us that that was a deviation of the range. If price comes back into the range, then we can target the other side of the range. Okay? And we'll just let this play out to see if it goes any further or not. Right, so we do end up filling the rest of the gap here. So nice move. This does end up being a deviation. It does end up targeting the other side of the range. Okay, so we can go ahead and do the rest of the week. New York is just opening now, so we'll get a little more examples in. We'll finish up the week, and then we can go over to live price along with questions. Now, while we're going through this, I also want you to think about the results here in terms of risk to reward. It's right here. Because the thing is we should always be targeting 2R. It should be a 1 to 2 risk to reward, because The fact of the matter is nothing in this world has a 100% win rate. So you, as a risk manager, need to put the probabilities in your favor. What I mean by that is if you're targeting less than 1%, if you're targeting less than 1R, you're going to have a very good win rate to be profitable. So again, this is where you look at your own results to see where you stand within price to understand how to move forward. For example, if you're targeting a 1 to 2 risk to reward, then you really only need to be correct 50% of the time to be profitable. So let's move forward with that logic. Let's just do a 1 to 2 RR, because I know that I'm not perfect. I don't get things right every single time, but I do think I can do a 50% win rate. That is nothing astronomical to ask for. That is a realistic expectation instead of what you see on social media with these guys, winning every single day, 90-day win streak. I make, 30R in a week. No, don't listen to any of that nonsense. And let's also have a realistic expectation here. A 50% win rate, that makes sense. Price can either go up or down, right? So in terms of being right, you only have two options. Price only goes up or down. 50% win rate is very realistic. And I'm saying that for any trader. It doesn't even matter how many years of experience you have here. So if we're using 1 to 2 risk to reward, then we'd be plus 2R on the week here. Okay, moving into Tuesday. And now we're going to play out Tuesday. And the purpose of me speeding up the time, once again, is because I'm a New York AM trader. So all of this doesn't mean anything to me because I'm focusing on 9:30. So we're going to just get to 9:30 here. Okay, so now is the point in time where I'm sitting there, analyzing price to get my pre-market analysis prepared, and I'm going through my model to get ready for the day. But nonetheless, we're just going to go through the same logic that I just provided. Again, the range. Step 1 is the range. We're always going to identify the range. After we identify the range, during the important times, we're looking to understand price. Okay, so at 9:30, we're manipulating the bottom of the range. Okay, so if we understand the range and now we're seeing manipulation of the range, the only thing we need to do to confirm that this is manipulation of the range is our entry function, right? The breaker block plus the FVG. Breaker block's found here. FVG should align with the breaker. FVG should be right in here. Okay, so if price doesn't provide our entry function, then I'm not considering this to be a deviation in the range, and I'm not targeting the other side of the range. But let's see what price does. So once again, now that it's 9:30, since I'm a New York AM trader, I can start to hunt for my entry function. I've defined the range, and I can see that we are deviating the bottom of the range. So this looks like a bullish manipulation. We would then need our breaker block. There it is there, right? You get a sweep of the low. You get a breaker block here, right? So now we have our entry function along with our logic. We've defined the range. We've seen a bullish manipulation. Now we have an entry function. So as always, I always enter at the beginning of the breaker block with a stop loss a couple points below the breaker block. And as we stated, we're going to use a 1 to 2 risk to reward, which this is beautiful that it just lines up very nicely with the other side of the range, because the logic we're using is that here's your range. We're looking for manipulation of the range. When we get manipulation of the range, do we get our entry function as a way to engage with price to target the other side of the range? Let's see. Let's see if we get an entry. Let's see what happens to this position. Okay, we do get an entry. Oh, there's a second entry there. Third entry. So we're on a 5-minute time frame, so you have a lot of time, right? 15 minutes to position here. And there you go. So now we're looking at plus 4R on the week. As a risk manager, in my opinion, I'd be done. I'd be done for the whole week. What more do you need than being green in one of the hardest businesses there is to run in the world? Like at this point in time, price doesn't even matter to me. I've done my job. I've came into the marketplace and completed my objective. Objective being create a plan, execute the plan, allow the results to be a byproduct of that. And I've just pointed my entire plan to all of you. All we're doing is time always being the most important element, right? 9:30 open is what we just looked at 2 times in a row. Understanding the draw on liquidity, right? Understanding the draw on liquidity could be as simple as understanding how to use the logic of the stat map. Meaning you get a range. After the range develops, you look for manipulation of the range. If you get manipulation of the range, we then look for how to engage with price, meaning your entry function. And then the draw on liquidity is always going to be the other side of the range. Time, draw on liquidity, entry function. That's it. We don't have to make it any more complicated than that. And now you're looking at plus 4R on the week. Plus 4R on the week as a risk manager, I'm done. I don't care about Wednesday, Thursday, Friday. We could still go through it just to look to see how the rest of the week pans out, but I'm done here, right? I'd rather be green than continue to overtrade and hand any of that back. It's simply in a emotional intelligence and a mental intelligence at this point. If you want to keep pushing and keep forcing yourself upon price, you have to understand the risk you're taking. And the risk you're taking is handing back the green that you just made. Is that something that you're willing to risk? My opinion is no. But let's keep going. Now, the next thing that I also want to point out here, understanding the logic of using this tool, is acceptance above or below a range. Right? It's the same exact thing of identifying deviation of a range. Right? I know that this is a deviation of the range because after we manipulated the range, we had a change in the state of delivery. We changed the direction that price's order flow was, right? We were moving lower. After we completed manipulation, we changed the direction and started moving higher. And what I'm trying to say is acceptance below or above the range can be seen if there's a change in the state of delivery. So let's walk through this here. No change in the state of delivery because price did not close below the candle that took liquidity. So there is no change in the state of delivery there. Notice how there's still no change in the state of delivery. Now we're beginning to accept above the range, right? I know everybody's going to laugh at me because this community is probably majority ICT traders, but support and resistance, right? When resistance gets flipped, it becomes support. All you ICT lovers, don't yell at me. But notice how the range is now providing support to price. Acceptance above the range sounds like distribution is about to happen. Our next logic or understanding of the stat map. You get a range, you look for manipulation of the range. You can understand if it's manipulation because after deviating from the range, do we get a change in the state of delivery? Yes or no? If we get a change in the state of delivery, then you can target the other side of the range. When you're, again, at the extremes of the range, but you see acceptance above the range, right? There's no change in the state of delivery done here. Then I'm thinking that distribution is incoming, right? At this very moment in time, it looks like we're accepting above the range because the extreme of the range was resistance and now it's becoming support. So it looks like distribution's about to happen. Distribution, right? Distribution being the final target. The point to me saying this is the logic of the tools. Starts with identifying the range. Then you look for manipulation of the range. If you get manipulation of the range, you then target the other side of the range. And depending on what happens at the other side of the range, does it accept above the range? Yes or no? If yes, it looks like distribution is coming. If no, then get out of your position and be done at 1 to 2 RR. Okay, so you're looking at 4R on the week. Again, I'd be done at this point. So you're done on a Tuesday. Could you imagine? Could you imagine? Nonetheless, let's finish up the week and then we can get into any questions or comments. I'm going to get over to New York Open again. I'm also going to take another sip of coffee and then we'll get into Wednesday's price action. All right. Thank you very much for your patience. So nothing changes here. And this is how efficient the tool is, right? If you just understand the logic, that's when it becomes muscle memory because the steps don't change, right? I'm just going to keep doing exactly what I've been doing the entire week. Range. Let's see if this is a deviation of the range because we would need a change in the state of delivery. This is also 9:05, so we got to wait a couple more candles either way because, again, time is the most important element for my model. Okay, 9:30, we can start to look. Starting to get a change in the state of delivery here. All right, so again, this is what I would be looking at. Couple points below the breaker. Yes, I understand that I'm pointing out a change in the state of delivery. A breaker is a breaker block plus an FEG. But if you understand unicorns, every unicorn is going to have a change in the state of delivery. So here's the change in the state of delivery. Yes, it is also a breaker block plus an FEG. So it is also a unicorn, right? So we're looking at this here. And so there you go. This is your first example of what a stop loss would look like, right? So now I'm going to go back to the statement of, did you really want to keep pressing the button? When you're plus 4R on the week, are you going to be that greedy to keep pressing the button? In terms of being a risk manager, I would rather think in terms of risk than reward. Okay, so here's your first example, though. This is because you need to know what a loss looks like just as much as you need to know what a win looks like. The entry function always remains the same. It's always going to be a breaker block with an FVG. It's very easy to understand what entry functions are by understanding the logic of the tools. Range, manipulation of the range because we've visited the bottom of the range. When we visited the bottom of the range, we got a change in the state of delivery. That's when I would target the other side of the range as a draw on liquidity. Right? And nothing in this world is a guarantee. So this is why I'm saying you need to see what a loss looks like. This is a loss, right? Because I stated that I enter from the beginning of the breaker block with a stop loss a couple points below the breaker block. After entry, price went down to the stop loss. Right, so now you've just lost an R, and now you're sitting at plus 3R on the week. Did you really need to press the button again? In my opinion, no. 4R is great. That is beating the majority of this industry, making 4R a week, let alone the fact that people aren't even profitable in this industry. So being green alone is a goal. The amount of green that you have is just a personal preference. And that's usually where everybody goes wrong because they fall into greed, thinking that they need to keep pushing the button because they're not at the location that they want to be in life yet. Instead of submitting to time and thinking logically instead of impulsively. Logically, in my opinion, would be plus 4R is more than enough to make this into a business, a career. The only reason why you wouldn't do that is because you don't submit to time, you think too euphorically, and you're being impulsive because you want to get to your goals quicker than you should. Reality of the situation is you're going to have to do the same thing a million times over. There will never be a time where one position changes your life. Plain and simple. Show up and work. Show up to your session every single time. No, that doesn't mean press the buttons every single time, but that does mean show up and work. Because it'll never be one position that changes your life. Like, go to the gas station and get a lottery ticket if you truly want to think that way. But in my opinion, that is a gambler's mindset, and that is very euphoric and impulsive. And in terms of a long-term healthy business, doing euphoric, impulsive things is going to get you liquidated. So let's get out of that gambler's fallacy and submit to time. Because remember, time is the most important element of the model. Nonetheless, you'd be sitting at plus 3R now because you chose to continue pressing the button. But the logic is going to remain the logic because we need to build muscle memory. We're not looking to change the logic. It's going to remain the same. And the logic is range, look for manipulation of the range, target other side of the range. Plain and simple. So you're sitting at plus 3R on the week here. Let's move over to Thursday. It's the same thing over and over again. And that's the entire purpose, is when you can identify and define something so specifically, that is when you have an edge in the market. When you can clearly define your justifications to your actions. Here comes 9 o'clock. All right. Same exact logic as always. Range. 9:30, it's time, right? What is price doing to the range? What is price doing to the range? Right? Again, you guys are just going to laugh at me because I know everybody's ICT traders in here, but when support becomes resistance, sounds like distribution's going to happen. Right? We deviated from the range. When we deviated from the range, I do not see any change in the state of delivery. So if you go back to Tuesday's example, when I said acceptance above or below a range, sounds like distribution's about to happen. So we have accepted below the range. We know that this is the range because of the tool. We know that we're accepting below the range because there has been no change in the state of delivery. We have not gotten back into the range to target the other side of the range. So since we are accepting below the range, in my opinion, it looks like distribution is about to happen. So again, understanding the logic of the tool and now understanding time because the next candle is about to be 9:30. Let's see what happens. Oh, wow. Well, I wasn't expecting it to be that energetic, but I appreciate that. I mean, instant distribution, so I definitely appreciate that. But there's the logic again. There's really no decision making that needs to happen here. It's just a couple steps, and you move forward with it. Range, first step. Second step is price needs to visit one of the extremes of the range. When it does, is it manipulation or is it accepting above or below the range? That tells you the answer to whether you can target the other side of the range or not. So you've seen examples of manipulation, and you've now also seen examples of acceptance. Now this goes and completes the objective before I ever get one of these right here, right? My entry function. So in my opinion, right, because I'm a 9:30 trader, I'm a New York Open trader. At 9:30, they instantly distribute lower without giving me my entry function, right? A bearish unicorn. So since they completed the objective without me, in this scenario, I'm sitting there saying, I have no position to take. This is a day where I would be flat. I would not have any position because my entry function was not present at the time that I hunt. So in my opinion, this is a day to be flat. The objective has been completed, so I no longer have to analyze price. I'd be done for the day, and we'd still be 3R in the week. So let's get into our last example, and then we can do some questions and answers. Last example, and then we can get some questions and answers. Also, if anybody from the 2 Degrees team is there, let me know if 10 o'clock is a hard turnoff. I realized that the meeting was from 9 to 10, and it's already 10 o'clock, and I haven't finished the meeting. So if we're allowed to go over 10 o'clock, just let me know.
You got the stage, brother. Everyone loves you.
Awesome. Thank you. All right, last example, and then we can take a look at live price as well, along with any questions and answers. Same exact thing. It's just the same thing over and over and over again. And that's why I'm calling it mechanical. I understand that there are some decisions that need to be made, but what is mechanical is this is always going to be the range, right? And then what is mechanical is understanding whether we get acceptance above a range or below a range, or if it's manipulation, because the next thing we would do is understand what to target. So a couple more candles here, because again, I'm a New York Open trader. All right, so New York Open, once again, this is where I begin hunting, and I need to see what happens with the range when I start hunting. Okay, this looks like we're beginning to accept above the range. What are we looking at here? We swept. This is 8:30, so this is most likely the data lows. We swept them. After sweeping them, we're creating a breaker block that has an FVG aligned with it. All right, so in terms of an entry function, along with logic, you're looking at what could be acceptance above the range, and you're looking at a bullish breaker, which we need one more candle. Okay, there is an FEG aligned here. I understand it's small, but it is present. Right, here's the FEG right here. So now we're looking at acceptance above the range along with a continuation unicorn, right? Breaker plus FVG. It looks like actually, nope, that is after the swing high. So this is correct. So breaker plus FVG, bullish unicorn, while we are accepting above the range. This is what I would be looking at here. Again, entering at the beginning of the breaker block, stop loss a couple points below the breaker block, and we're looking at 1 to 2 risk to reward. Simply by identifying the range, looking at the extremes of the range to see if it's manipulation or acceptance, and then using my entry function, breaker block plus an FVG. So we'll see, this would be the first moment in time that the entry function was confirmed. So we'll see if we get any entries, because we would enter after this candle closes. Okay, you do get an entry there. And beautiful. Okay, I understand that this is not perfectly 2R, right? It's 1.95, but I'm going to go ahead and say that the objective is completed. And what I'm saying here is do not fall into greed. If you're going to tell me that you've just obtained 52 points on NQ and you decided, no, I'm not going to close my position because it is not 2R. It's 1.95. It is not 2.0. I'm going to sit here and tell you that that is the most greedy thing I've ever heard. If you are 1 or 2 points away from your target, you need to close your positions. Okay? I understand that I said I'm doing 1R or 2R in terms of risk to reward, but I'm also sitting here saying, let's think a little logically. Okay? If you are 1 point away, 2 points, 3 points away from your target, close the dang thing. It's the same thing over and over and over again. Range, acceptance above or below, or is it manipulation? Because that shows you what you can target. You either target the other side of the range if it's manipulation. If it's acceptance, then you're thinking distribution's about to happen. And I'm even showing you how to engage with price, How do you actually move from an idea to executing that idea? Right? Breaker block plus an FEJ. No, I'm not saying that's the only way to engage with price. I'm just showing you my experience. And if you want to engage with price with inversions, turtle soup, whatever, it doesn't matter. What matters is what you're capable of identifying and executing. There is no right or wrong. There is no order blocks are better than unicorns. Inversions are better than order blocks. No, the only thing that is right or wrong is your P&L. You are either red or green. That's it. If you want to use inversions, be my guest. If you want to use order blocks, be my guest. If you want to use unicorns, be my guest. All of them work. It's the operator that creates a profitable model. I'm going to say that one more time so everybody can hear me. It's not the model. It is not the model. You can use inversions, you can use unicorns, you can use order blocks. It's not the model. It's the operator. It's the operator that creates a profitable model. Your ability to have emotional intelligence, mental intelligence, to align your actions with your words, your ability to have justifications to your actions, your ability to have discipline in carrying out those justifications to your actions every day that you show up. And no, I'm not a robot. I'm not saying that, there's some days where I have trouble following my justifications. We're all human here. Okay? But I think you need to take extreme ownership in your business to be able to at least say, hey, I'm having trouble, today. I didn't have my coffee yet. I'm a little hungover because I had some drinks this weekend. Or my wife is asking me to do something, so I can't focus. Anytime that you can't align your justifications with your actions, don't participate. I know it's kind of hard to say that because social media provides such misinformation, but you don't need to click the buttons every day. If you remember the beginning of this conversation, I told you I would have been done at 4R because my risk parameters, I only trade 1 time a day maximum, 2 times a week maximum. And in fact, my current statistics show that for the past 2 months, I've only executed on average 1 time a week. So if you're in the camp of needing to trade every day, I would like to bring some light to that decision. You do not need to trade every single day. The only thing that you need to do is look internally and take extreme ownership of your business to understand what you're capable of doing. If you're capable of trading every single day and you have the results to prove that, please be my guest. Go ahead. But it should be factually based decisions driven by data. If your data shows you the results that you're capable of executing every single day, be my guest. But do not blindly follow social media. Just because somebody else is executing every single day does not mean you have to. And that's why I specifically said take extreme ownership of your own business. And you do that by looking internally, not externally. So last week, using this logic, you could have been looking at either plus 3R, plus 4R, or plus 5R. And now I'm giving all of those results because for me, it would have been plus 4R because I told you I would have stopped after the second win. for somebody that took a loss on that third position, you'd probably be sitting at plus 3R, and you might even sit there say, hey, I'm not willing to lose any more green. So that person might be plus 3R on the week using this logic. Then you have the last individual that is just going to keep pressing the buttons anyways, but we're hoping that that person at least continues to follow the logic. That person would be sitting at plus 5R because Friday ended up being a winner as well. Yes, I understand. It would be plus 4.95. Just a little joke there. But you get what I'm saying. So, just to recap, and we'll close it up here, and then we can move into any questions and answers. Range, deviation of range or acceptance shows you what to target next. And now if you need a plan to execute, that's when I go back to saying time, bias or draw on liquidity means the same thing. Entry function. So logic provided to your decision making through understanding the tool. Having a game plan and executing the game plan. Time, bias, entry function. So give me 1 minute. I would love a little bit more coffee. And then throw some questions, throw some comments in chat. I understand that I was focusing on the lecture before. Now I can get over to chat. So if I missed your question earlier, please just throw it in chat again, because there's been a lot of comments, so I'm not going to be able to scroll up to the beginning of the chat. Just give me 2 seconds. Going to take another sip of coffee, and then we'll get into a Q&A type of portion of the stream now.
Yeah, I'm absolutely loving this right now, and I'm sure that many people are also in the chat are really appreciative of your time. This is a great time for you guys to just refer back to your notes. Just again, drop a question in the chat. We'll be able to go through them one by one. I really strongly believe that there's a lot of people that are just rushing to get into a trade, and for a psychology standpoint, if you guys want, I would love to, and I'm just kind of throwing this out to Ash. I'd love to just do like a psychological, more or less one-on-one with you, and then try to just share it with the community. I think that'd be very highly insightful. Me and Ash are really big believers of the mind, and having high emotional intelligence while you are a trader is just critical to your success. So just want to have that be known. There's a lot of people again rushing in the chat. It's just out of excitement, but over time, when you're just more exposed to the industry of trading, you want to limit that excitement, because your job should, again, just to be executing your model, not necessarily out of excitement, frustration, anger, anything. So it's purely mechanical. And again, if you're not someone that wants to trade mechanical or have a mechanical model, then extensive back testing and forward testing is upon you. So I'll just kind of leave it at that. So more or less just open it up for questions over here. If there's anybody that is there in the chat, yes, this is going to be recorded into the 2 Degrees live stream database. More or less, it's up to Ash, but I'm sure he will, be posting this on his YouTube as a recording as well. So that'll be for you guys to view at your own time.
Thank you for the patience. Yes, I would definitely love to have another conversation regarding any psychology, because I thoroughly believe that it comes down to the operator.
Very true. Very true. We got a lot of people in the chat asking about the stat map settings. Would you mind just double clicking your stat map and just more or less, let me help you out too for anybody in chat because this is a good learning opportunity. You see how you have all those like, 60-40 candle, blah, 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 blah. Those are just all indicator arguments. So if you right click where it says OHLC stat map on the top left, where your indicator is, like where the actual indicator is, right? Yeah, if you right click that, you see how it says indicator arguments and values. You could turn that off. And then basically you're going to be like, oh, wow, my charts are all clean. And hopefully someone else has that aha moment. But my OCD and T trades and 2 degrees, we're always looking at that and be like, okay, well, hopefully that helps somebody out. But anyways, if you can double click the indicator settings again, and just so anybody can just see what you're using, that would be awesome. So I'm really happy, Bobby in the chat. That was an aha moment for you. I'm very happy for you. My OCD flares from that. So that's awesome. But yeah, if you could just double click your stat map now, Ash, and just show everybody your settings. Just yeah, regular, just change. Yeah, there you go. Well, that's the regular chart settings. Just the actual. There you go. Perfect. So he's using the daily stat map, and he doesn't have the time anchors on there because again, his model is based off of time. So he has his own entry function of time, and his own time requirements. So he's not necessarily looking at that. If you scroll down on the indicator settings, you'll see he's just using a standard, 60-day out of the box look back. And that's just, again, the last, 2 months to 3 months of price action. And that's more or less a nice volatility metrics for an IPTA look back. You can obviously play around with your calculation look backs and to see how these levels change. But, again, as you understand the data metrics, unless there's a huge outlier day, it's also very important you guys understand the data behind it, because a lot of people say like, oh, you need the tool on your charts all the time. But if you understand what the tool is also showing, like look at your opening price. What value is the opening price? It's around 140. What area and more or less numerical values at the D levels and the manipulation and the distribution levels, like those are going to obviously change, but you want to be able to know like more or less a constant variable. So that's really, really, really important. So it just helps manage your expectations as well. So, but yeah, that's more or less Ash's indicator settings. And I believe that, again, if there's any questions about that, it says you have the same indicator Pro Plus. What's the difference? I don't necessarily know your question, Pradeep, but if you have more clarification, I'd be happy to answer.
I'm going to throw 2 cents in there. There is a
Absolutely.
slight chance that you're using the indicator on the monthly contract. If you're using the same exact settings, but you're on the monthly contract, you will get different information.
Yep, for this tool, it relies on a data calculation look back. So when you have a more or less a new contract delivery month, then more or less your data is going to be more spotted. It's not as full. And also as another thing, because there's a question that we get a lot, because you want to be able to have congruent data is having anything of more or less like gap risk and the contract rollovers is why you'll see a lot of stat map users be trading with be adjusted on. And that's again to eliminate any data outliers from gaps and rollover contracts.
No, I don't use session stat map. This is the only stat map that I use here. Open, high, low, close stat map.
Kane's got a nice question for you. He says, Ash, what was the gotcha moment for you where it just clicked?
So I show up every single day. It's a visual learning thing for me. When you see a repeating phenomenon, it becomes very clear. It's because I'm a visual learner. So, right, every time that, and I was speaking to Josh Yu about this, I did go through a period of due diligence. I before this had never used any indicators. Obviously, these words up here don't count as an indicator, but I had never used any indicators before. So I needed to go through a due diligence period because of my own trust issues. But then when I collected my data, the amount of times that I had seen a range deviation and then a change in the state of delivery, the amount of times that I've seen that happen and then it play out was more profitable than not. So it was a data collection thing that was an aha moment. Before this, I was still doing a form of this, just doing it manually. I was going on to the hourly, looking to place myself in bullish entry functions below swing lows or bullish entry functions inside of bullish FEGs. Obviously, vice versa for bearish positions, but having that system automated while still conducting exactly what I was doing before was the conviction needed to actually start using indicators. For all the people that are in here that are in my group, they would probably agree with me, but the model hasn't changed. And that was actually the conviction, is that the same justifications to my actions can still be completed, but I can take a piece of the process out, which that for me is efficiency. If I don't have to look at the hourly chart to go get those higher time frame points of interest, then StatMap holds a lot of value for myself. The logic of range trading, the logic of being able to identify manipulation, that portion was always there. The understanding of price was always there, but the efficiency is really what caught my eye. And when looking at the efficiency, the amount of times that it worked versus the amount of times that it did not work showed its value.
Beautiful response. If there's anyone else that has a question, we would love to kind of talk about this. This is an open discussion. If you don't feel comfortable, again, typing your question, or you feel that it's, too unclear from text and you are still fluent in speaking English, I'd be happy to invite you up for a brief amount of time just to, more or less ask your question. But please be respectful if that does happen.
Ash, can you go through today's PA regarding your model? Right. So again, time, draw on liquidity, entry function. You're looking at the same thing that we had just ran through a week of price action, right? So identifying the range, step one. Step two, here's 9:30, right? So I could start looking after 9:30. What is price doing to the range? Manipulating, because we see the change in the state of delivery, right? So in terms of the model, this is what I'd be looking at, right? Targeting the opposite side of the range. We can set it at 2R as well. No, I did not get to enter on this because it's not a breaker block. It's not an FEG aligned with the breaker block. So I only execute unicorns, but this is in fact change in the state of delivery, and it was done with an FEG. So anytime you're looking at a change in the state of delivery, it looks more convincing if it was done with displacement, right? The presence of an FEG. You're looking at a bullish FEG here. So 9:30. Excuse me, let me just rewind a little bit. Range identification first, step one. Step two, look at the extremes of the range during your hunting hours, right? So 9:30 is when I start to hunt. At 9:30, we deviate from the range. I understand that this is manipulation because of the change in the state of delivery. Once you understand whether you have manipulated or accepted above or below the range, tells you what to target next, which is, right? Oh, I erased it already. Time, draw on liquidity, then entry function. So understanding that after manipulation, we then target the other side of the range. this would be the draw on liquidity here. And for anybody that used that information, right, the change in the state of delivery was confirmed here at 9:45 when we got a candle closure above it. Again, it was done with an FVG, so it was done with displacement, giving me more conviction to the idea. You have 1, 2, maybe 3, 4 entries, and now you're looking at plus 47 points already? Jeez. 47 points of NQ is life-changing. You could be done here. Like, it depends on your risk to reward, but plus 47 points of NQ is just, man, if you if you grabbed 47 points in NQ daily, then it doesn't sound like you need a 9 to 5 anymore. So the only thing I do have to say about this is I explained the economic calendar before we started this conversation. I'm personally, and my group knows this, I'm not trading until after the election. The election is, you know, it's a bit, you don't know what's going to happen. In terms of a normal red folder, right, we can at least anticipate a certain form of liquidity injection. So there's the difference between an election versus a normal red folder. I had told my group that I'm not going to be participating until after the election because it could be a volatile, unpredictable event. So yes, this is an example here, but no, I'm sitting here saying I didn't take the position, and that's why. Do you trade just NQ or do you also trade ES? So I focus on ES and NQ. There's been very rare times that I've also executed oil, but in my opinion, less is more. You do not need 10 different pairs. You need 1 or 2 pairs. Less is more, quality over quantity. Can I enter NQ1 rather than NQZ? Yes, you can. You can use a continuous contract. Again, if I missed any questions or comments, please just throw it back in chat. The comments are moving a little faster than I'm used to, so I'm
And
not.
that means they love you, brother.
Yeah.
That's all it means.
So please know I'm not ignoring you. I just can't read that fast. Yes, sir. I was mentioning about the current change in the state of delivery. Just want to know if the current price action is displacing through the breaker for the unicorn model. This is not a breaker, right? You need the institutional swing points for a breaker to form. You need to have a swing low. You need to have a swing high. You need to have a new low, then a new high. Right? There is no swing low in here, so there cannot be a breaker in here. So, right? No swing low, no swing low, no swing low, no swing low, no swing low. None of these are swing lows. Therefore, we do not have this first institutional swing point. Therefore, this cannot be a breaker. So that's why you saw me only point out the change in the state of delivery. This is a change in the state of delivery, but those are two different concepts, right? And it's finishing its objective here, right? So again, the one comment that I had made, when you are a point or two away from your take profit, let's be logical and just close the position, right? So, I mean, you really couldn't ask for a better example here. You got your range, you got your manipulation, you got your change in the state of delivery, you can target the other side of the range. And it just happened live again, right in front of us. There's the conviction comment that I was referring to earlier. When you see the same thing happen over and over and over again, conviction is built through experience. So put more time in. I'm not saying trade more. I'm saying how much time have you really spent with price? That's what I'm asking. Conviction is built through experience. So the amount of times that I've seen this exact thing happen, a range, a deviation of a range, does it accept or does it manipulate? Okay, this one manipulated because we can see the change in the state of delivery. That's how we know what to target next, other side of the range. Do you close the trade on NQ, for example, if ES hits the distribution level? If you're looking for any divergences, which you would look at yes for any divergence, right? You can use that as a reason to get in and out of the trade. That's fine. That's not what I do. But again, it's not about being right or wrong. It's about you being capable of defining and identifying how you execute and how you manage. Would you advise taking your breaker from a 1 minute time frame? Because from a 1 minute standpoint, we have so in my opinion, the 1 minute is way too noisy. I highly suggest getting off the 1 minute chart. Okay, so yeah, I'll go look at it for the sake of the conversation, but my opinion on your question is get off the 1 minute chart. Use the daily as your bias. I no longer have to use the hourly because of the stat map and execute on the 5 minute chart. So yes, you do get the institutional swing points. You have a swing low, a swing high, a new low, and then you don't get a new high until up in here. So I wouldn't call this a breaker until you get candle closures past the breaker, right? So here's your breaker. So this is the first time I would call this a breaker right here at 10:01. Does have an FVG aligned with it. So this is a 1 minute unicorn. And after you get your final confirmation to it being a breaker, it gives many, many entries in here and then moves to what would be our draw on liquidity, the other side of the range. So yes, this is a 1 minute unicorn. It's not very clean because of look at all this consolidation in here. Right? I'd rather just see clear displacement. But that is correct. I'll just finish it with saying get off the 1 minute chart though. In my opinion, it's just too noisy, too volatile. For somebody that needs more time to make decisions, then the 1 minute chart is not the answer.
And again, I just want to emphasize, like, everybody has their own personality. Everyone's going to trade a different way. And everybody's here in the audience, again, to be respectful and understanding that Ash is here to describe his model, his personality, his psyche. And you don't necessarily need to trade the way that someone else trades. No one's pushing that on you. No one's forcing you to think a specific way. It's indeed the opposite. We want you guys to be open-minded and thinking on your own. You're seeing theory here, and then you can decide what you want to do with that. The concept of discernment. That's very, very powerful. So I'm intriguing,
100% agree with
all of
that.
you guys to just go in, dive into your charts, and just see it for yourself, right? And again, you can see this, like you guys are about to say, like, oh, you need the stat map, this and that. Look at the chart right now, see the open, see the manipulation, decide on an average, and understand that you can still back test without the tool. I know a lot of people are saying that, hey, listen, I want to see the tool, I want to back test it. Take a look at the examples. And then, look at other people's screenshots as well. There's ways to back test that you don't necessarily need to buy the tool just to back test. So you can see what other people are doing with the tools and then go back into your own charts and say, hey, listen, what does that look like for me? What do I want to look at? So
Fully agree with that. I love the fact that we got a live example here too. So if anybody has any other question or comments, feel free to throw it in chat. I am going to wrap it up because I believe that I'm already over my allotted time. So,
We don't have a hard time limit for you, but of course, if anybody wants to have any last questions in here, we just want to keep the recordings around to an hour and 30 minutes, so they're just digestible for everybody that wants to rewatch them as well. We could be here for all day. We're definitely gonna have that in the future. I believe that that's gonna be pretty exciting. Do like an all day stream, 2 degrees takeover. That'd be fun. But that's just for the future. But um, I just want to answer one question. Pradeep, you say that you're saying that you're having like different levels than Ash. So if you can just send us a ticket, and then I'd be happy to just give you more personalized assistance. Um, and again, we'll be happy to answer anybody. We have terrific moderators. We have a wonderful community of people that are around us. So we'd be happy to, again, provide any personalized assistance to anybody through ticketing. If your question is more or less still generalized, we still ask you to ask it in the general chat because chances are someone else may have the same question as you. So just help us create our community stronger by asking us relevant questions for personalized assistance in the send ticket, and then more generalized ticket or generalized questions in the general chat. So yep, we got the NQ continuous contract here, 9.5. I think that's your question right here. Jordan, you have a question over here saying OTE example combining stat map with OTE and standard deviation. So we're gonna have FX for Living coming up soon on a new live stream as well for November. And then we're also gonna have Dexter, who does a lot of work with standard deviations as well. I know that 2 degrees is also gonna have some time that, talk a little bit more about his standard deviation concepts. I'm sure that the Dexter standard deviation and 2 degrees standard deviation conversation is going to be quite impressive to say the least. So definitely, definitely look at your calendars. Take a look. That's already in the calendar, I believe. If it's not, it's going to be added pretty soon. Let me just take one more look. Yeah, so we only have this week's event on there, but we do have Dexter, Trader Dexter from Monster Lab coming in on the 11th. So hopefully that answers your question about OTEs and standard deviations.
for
Yeah, if there's
the
any other questions for Ash, though, I really want to more or less just give him the stage for questions regarding his model, his strategy, his vision with the stat map. So yeah,
so
sorry to
for the
cut you off there.
individuals asking about the PM session, price is fractal. You can use this AM, PM, London, Asia. In my opinion, I focus on New York AM because that is where almost all of your high impact news is. So in terms of importance, they put a large importance on New York Open, whether you're talking about just in general the stock market opening or high impact news being your important times. The majority of that happens in the AM session. So I focus on AM, but yes, price is fractal. You can use this in the PM. You can use this in London. You can use this in Asia. So yes, you can use it in PM is the answer to that question. I believe the Breaker Babe and Brian were both asking about the PM session. No, I wouldn't change the projections. In my opinion, daily projections, right? One day, daily projections are important levels. In the beginning of the conversation, I had mentioned being aligned with higher time frame order flow and moving from the economic calendar to the daily chart. I stand by that, and that is why the settings are also showing daily projections, because you want to be on the same side of the order flow on the daily chart. Yes, this has been recorded, so I'm going to put this on my YouTube. 2 Degrees is also have their location. They have it as well.
Wonderful. And I think this is a great place to just again just give you the thank you. And I know that 2 degrees wants to have some words as well. So I'm gonna give it to him as well.
I appreciate everyone coming through. Matt, thank you for giving us the time. I know we didn't get a chance to meet each other, but hopefully soon. Definitely a lot of gems were shared, and I'm looking forward to see some notes from people and just claim your XP and stuff. And yeah, I'm looking forward to having you back, brother. It was great.
Absolutely. I appreciate your time. Thank you for having me. I did record this, so we are able to get it in your archive or whatever location you need. If it's all right, I'm also going to put it on my YouTube, but I'll
By
let
all
you
means,
make that call.
yeah, by all means, send it.
Absolutely. Thank you for having me, and we should definitely set something up. I would
Awesome,
gladly
awesome.
meet as well.
If right before we go though, if you can, I know there's 207 people right now still in the audience. Please, it takes literally 3 to 5 seconds. Just say thank you to Ash. He, more or less dedicated his New York session today to more or less talk to you guys about his theory, his model, shared a lot of gems. And, as long as you guys are, again, respectful and thanking him for his time, I'm very pleased to also say that, he will obviously be back in the future. He loves what we're doing with 2 degrees, and, we're just very, very blessed to have a very strong community. And, Ash, if you can just go ahead and take a look at the comments, a lot of people giving you a lot of love, and it's just very incredible to see a lot of people that are just grateful. So just
Yeah,
thank you so much for everybody.
I'm also grateful for all of you guys. Thank you guys for showing up. If you have any questions or comments and ones that I didn't get to, I'm still open to answering questions. I understand that we're wrapping up the live stream, but you can still contact me. So thank you for everyone for showing up. I hope that any of the information provided could provide some insight for you guys. Please feel free to reach out to me if you have any additional
Yep.
questions.
Before we wrap it up, tell people how they could find you, about your Instagram, your YouTube, Twitter, any of your socials. If you can just either drop it in the chat or just, again, just even on your screen so people can just see where they can learn more about you, and again, more about your model and things of that sort.
Absolutely. So I live stream on YouTube. We'll put the links in the chat. I live stream on YouTube on Wednesdays. I live stream in Discords all the other days. I have a link to the Discord that I can also put in the chat. I also document my information on Twitter. I do have to say that Twitter is one that I have trouble communicating on because there are so many people asking questions at the same time. So if I don't respond on Twitter, please just contact me via Discord. Discord is where I spend the majority of my time. So Twitter is where I'm using it as a public journal. Discord is where I spend all of my time. So that is where the connection can happen if you guys want to communicate any further. And then free public live streams on YouTube. We do those every Wednesday. So thank you once again for your time, and I greatly appreciate the 2 Degrees team and everybody that was able to join today.
Thanks so much. We look forward to having you back, and God bless everybody in the audience. And just, I really, again, just thank you overall for everybody just making this happen. Just really, really appreciate everybody. Have a wonderful rest of your day, and be safe. Take it easy. Enjoy. Bye
Have a
now.
good day, everyone.